Okay, so welcome everyone. Thanks for your patience. Welcome to the MSDynamicsWorld.com Spring 2014 Financial Automation Webcast Series. I'm Jason Gumpert, and we are here joined once again this spring by Henry Ijams, Managing Director at PayStream Advisors, a research and strategy consulting firm that focuses on the automation and benchmarking of purchasing and payables processes. We're really glad to have Henry back for this new session on using metrics and benchmarking to drive finance efficiency. And we invite you to add your feedback and questions today. You'll see a Q&A block and a chat to the right of the screen once we kind of return to the panel view. If you hover at the top of your screen, you'll also see access to those parts of the tool. So without further delay, please allow me to hand it off to Henry Ijams. Henry.
Thank you, Jason, and thank you all for taking some busy time and putting aside for learning more about how you can improve your finance operations. Specifically today, we're talking about accounts payable, but I'm going to be, for some of you, talking about what that relates to in procurement. When we think about metrics and efficiency in accounts payable, it's very hard for us not to think about the entire process of how we buy. There's three themes for today, and what we're going to be talking about is using simple metrics to drive efficiency. What that means is I'm going to boil down into three things. The three things are efficiency. The second theme is timeliness, and the third theme is customer service. So in a nutshell, how efficient is your operation? We're going to look at metrics that measure that. How effective is your operation? How long does it take to pay the invoices, pay the suppliers? And the last theme around customer service, how well do we service the buyers in our organization and, increasingly important, our suppliers, which many of our customers are telling us are becoming strategic to them, that the suppliers are not just a supplier, or we can buy that anywhere. But no, we're making more narrow decisions about who we buy from, and they're partners of ours. So accounts payable needs to be part of that. And I'm going to give you some lessons from the innovators. My PPT thing, well, I'll share with that what that is in a minute. So we're going to talk about efficiency, effectiveness, and customer service. So when we think about invoicing, we think about, okay, the invoices come in, they go through workflow, we have some exceptions when they don't work well, and we pay, and we have some reporting after the fact. What did we buy? Who do we buy from? Things that we can run reports. When we think about more about this, there's other elements that are increasingly important. The first piece is, on the payment side, opportunities that we have to pay more efficiently and effectively using, say, credit cards or getting discounts from our payments. This is a pretty hot area in the marketplace, and if you're not familiar with this, I want you to write down one piece: single-use accounts. That's a type of credit card used to make a corporate procurement, which gives you benefit. Increasingly exciting for Dynamics accounts, mid-market accounts, smaller customers using these payment cards or single-use account cards to pay suppliers on invoices that are approved in AP. I'm going to talk more about that. And the other piece that we bring into this is customer relationship management around the purchase request. So somewhere at the beginning of the invoice cycle, somebody wanted to buy something in one of our companies. Some of you use purchase orders, some of you don't. What's the opportunity when we think more broadly about that? So this is the world we call purchase-to-pay automation. But when we start, of course, we're thinking about accounts payable primarily. PPT stands for People, Process, and Technology. And it ties into the first theme that I was talking about: efficiency, effectiveness, and customer service. People are what make our operation costly. It's the labor. More than 80% of the cost of processing accounts payable, paying the bills, is people, is labor. And 40% of that comes from data entry. The other 30 to 40% comes from working exceptions. So if we can think about how we can be more people efficient, we're going to have savings. That's a key benchmarking theme that we look at. Here's what we know. Organizations today, 2013, purchase to pay, accounts payable, it's high touch. There's a lot of touching that we have to pass the paper around. We got to get the paper converted into the characters. We type it into our accounting system. And, well, we also have poor visibility. For many of you, paper-centric means that invoices, when we're doing accruals, are out in the organization. We can't see them. We don't have visibility. One of the most common pains we hear from controllers and finance managers is, hey, I have no visibility until the invoice comes in, and then all of a sudden it's an emergency. Why is that? Well, because it was sitting on someone's desk, and it wasn't important until the supplier started calling, which gets to a challenge around visibility in decentralized receipt. In other words, the invoices are sent directly to the person who's going to approve them, and then they're routed up to AP. It's the most common paper-based methodology. And we see poor collaboration with our approvers, the people who are signing bills, because they just think of accounts payable function as all they do is bill pay. That's all you're doing in AP, right? Isn't it? I don't really understand the risk mitigation that we're doing, policy checking, and probably most importantly, correct accounting for what was purchased. Should we pay this bill? Is it ours? And how do we allocate it? So we talk about this people, process, and technology. We usually start with people because that's the biggest challenge. And we talk about frazzled Frank. That was the guy in the lower right-hand corner. Here's the reality. There's not too many people that are going to have a career. When you think about the young millennials coming up, how many of them want to work in a manual, paper-based environment? Not too many. It's hard. It's hard to hire them. So when we think about the maturity phases, we think about stage one being at the introduction phase, where you might have a vision or a plan, and I'm going to simplify this for you in a minute, but ultimately the reason I'm showing you this is to start thinking about some of the metrics. When you're just getting started and you're starting with paper, you have a high defect rate. That's your rate of exceptions. Invoices that can't be processed in the first pass because something's missing, something's wrong accounting string, wrong PO numbers if you use them. Maybe it doesn't even belong to you, wrong address, wrong vendor, duplicate payment. Something is stopping it from getting entered and paid. For most paper-based organizations, that's between, well, typically 8 and 15%. And that's a lot of the cost. Organizations that move up this cycle move to lower defect rates and a higher touchless rate. That means transactions come in electronically or paper or PDF, but can be touchlessly automated into the system. Here's an example. An invoice comes in via PDF, via email. Many of us today, of course, we print that out and do the data entry. Tomorrow, with automation, you can strip that PDF file off of the invoice, off the email, extract it into a data storage system, and post it right into Dynamics electronically at about $1 a piece. Even cheaper if you have more than 3,000 or 4,000 of these a month. It's really transformative because thinking starts to say, well, wait a minute, do I want my people doing that, or can I use a third-party service to do it? When we move to stage 3 and 4, the metrics change. We start thinking about automated ordering and fulfillment. That means letting the approvers go into their own systems and do the work themselves. Self-managed transactions, local control, and you can see the defect rates and the touchless rates are very high. Right from there, you can get the sense that if we have 70%, 75% plus touchless, my accounts payable department is about a quarter the size of what it used to be. But how do we get there? How do we get to that reinvention stage? Well, I'm going to give you some sense. You first need to start with a vision. Where are you going to go? What are the benefits of getting there? And here's the important thing. Today, when we're designing these visions or goals or roadmaps for our clients, we're generally pushing them way beyond AP. That's why we want to talk about purchase to pay. You can see in this collaborative phase, we want more of the work to be done by the end users because they want to do it themselves. Think of travel expense, travel ticket reporting. Many of you probably are still doing travel and expense reporting on Excel spreadsheets or maybe manual sheets. Some of you may be using a tool like Incur or some other tool. Congratulations. Best practice, of course. It's pretty simple. There was no training needed to do it. People logged into a website. They understood the screens they needed to fill out, sort of like Amazon. You didn't need training to use Amazon. They knew how to bring in their expense report. They knew how to create a new one. They knew how to bring in the travel that they went to New Orleans last week on a business trip. They knew how to bring in that airline ticket, and they knew that a snapshot, take a snapshot of the receipts and attach them using their mobile device. Today, the users want to be in control, and with AP and invoices, it's the same. Send me the invoice, give me an ability to approve it electronically. And for those of you who are thinking about doing this, most companies today are focused either getting to the vision started or on the metrics. So that's what we're here to talk about today, the touchless rates, things like that. When we think about the future of this, we think about touchless transactions, first pass processing, stakeholder collaboration. That's why I was bringing in this concept of customer service. Because we talk about, well, it's easy for the approvers. They want to make it easy, so that's customer service. We've now satisfied their need, especially for your managers who travel. They're all around the country. Increasingly, our society is mobile and not in the office. The old days, we had an inbox. We'd put the invoices, and I'd sign them on Friday. Well, now I'm not in the office as much. I want to be sitting at the airport and taking care of administrative matters. Why? Because it's not part of my core job. My core job is to do something else, certainly not paying invoices. So as customer service, it means we need to make it super easy for our people to do the things we want them to do. And self-service technology means anywhere, anyhow, mobile. I'm sitting at the airport. I'm sitting at a baseball game. I'm at my son's soccer game. That's the way we live today. Increasingly, that's what makes this guy happy with his thumbs up. We call him Happy Harry. And he's going to dance down the street because in 2020, it's seamless to him. It's touchless. AP is happy because we have high efficiency because it flows straight through the first time. And we are collaborating with Happy Harry over there. He's the approver. He's the manager in Division 5. Even more, he's our supplier. He's our supplier that we can bring into our metrics today. So when we started talking about efficiency and labor, how much does it cost to process an invoice? This is the first step. Many of you typically cannot answer that question, and you can quickly answer it with PayStream's cost per invoice calculator. It's a free tool that we have on our website. Everything on our website is free. All of our reports, nothing costs anything. Google PayStream cost per invoice calculator. Do it now. Start filling it out. It takes you right to the form, and it's going to tell you what your cost per invoice is. You're going to put in how much staff you have, how many invoices you have. The next piece here is how long does it take to process an invoice? Okay, how long does it take the company? What is the number of days from the invoice date to the days that it gets posted in your accounting system? The reason that's important is because we know the longer cycle, the more pain we have. And the more pain we have, the more telephone calls we get. So AP staff time, between 10 and 15% of their time is handling inquiry. Suppliers, where's my money? When will I be paid? Have you called the approver? No. Well, call the guy you sent it. We don't have the invoice here in AP. So if we can reduce that cycle time and start notifying suppliers, hey, we have your invoice. Even more, We can do different things. We have new opportunities to engage with them. So here's an example. In our effectiveness rate, how long does it take? We measure this in cycle times. The average paper-based cycle time is 21 days. 21 days from the invoice date to the date that it gets posted in the accounting system. And that's typically with a day or two delay in accounts payable. But most of the delay, the 19 of them, is sitting on what we call Billy Bob's desk. That's the Billy Bob principle. Invoices are not the most important part of his job. He may be traveling. He may not want to get to it. He may have forgotten. It may have been emailed to him. Oh, I didn't see it. I came in while I was out of the office. I forgot to print it out. All the host of reasons. This is what we mean by effectiveness. How compliant are your users to the policies that you have? What percentage of your invoices can be posted the first time without having to go back to the approver? And what's your invoice exception rate, which is what we want to talk about here. If you're a PO-centric organization, we like to measure what are the reasons that the invoices didn't get posted the first time, what we call the first pass rate. Here's a PO mismatch. PO is closed, PO number's missing. Now the interesting question to ask is here, what percentage of these problems have anything to do with accounts payable? None. It's a trick question. None of those problems were created by accounts payable. They were created outside of accounts payable by an incorrect invoice, an incorrect PO, or some other error that really has nothing to do with accounts payable. However, accounts payable owns the reconciliation of this. And so in this example here, we have a first pass rate. Overall, 8 to 11% of these invoices couldn't be posted on the first try. Here's the reasons why in the shaded areas. Well, you can see why. 63% of the exceptions were something wrong with the purchase order. So now you can see why I'm talking about purchase to pay. This is not accounts payable, but we need to work with our procurement brothers to figure out how can we solve this problem. Today, accounts payable doesn't have this kind of data that comes out of the ERP system. Unfortunately, Dynamics does not track this easily, that you can report on it easily. And even more, we're not focused on these metrics because we're focused on, well, taking care of the paper. So these are the first steps when we start thinking about a metrics phase, is looking at exception rates and then sharing them around the organization to units and staff who can solve the problems for us. Not solve the invoice problem, but solve the holistic problem of why they exist. The other thing we know is pretty interesting. About 98% of invoices that come in that are wrong are typically not changed by the supplier. They're changed by internal staff, opening up additional PO amounts, credit memos. Other things really don't involve much of the suppliers. The suppliers are generally pretty good about invoicing us accurately. It's usually internal problems that are causing the issues. Our prices are out of whack. So overall, we're going to bubble this up now to talk about simple metrics that you can use to drive efficiency in your operation. The first one, time. How long does it take? Cycle time. I used to mention the laggards at 45 days. Invoice processing cost. How much does it cost to process an invoice? PayStream cost per invoice calculator is going to help you answer that very quickly. What percentage of your invoices are received electronically? Typically, most organizations, very low. Now, lagging organizations are going to say 3%, but even those who are getting PDFs emailed to you, which is very common. In fact, I would guess that for many of you, more than 50% of the invoices do come to you electronically in the form of a PDF. But you're not doing anything with that PDF. I'm going to talk about that in a sec. What percentage of invoices have discrepancies? And back to the discounts. Are you capturing all the discounts that you have? I'm going to talk more about that. So for you guys in the middle here, the mainstream, 21 to 23 days on average, $6.70, 9% electronic, 16% discrepancies, 40% discount capture. Now, a look at the innovators. Probably you can look at all these numbers and say, okay, it's interesting. The most interesting immediately to folks is Wow, this is 30% of the cost of the expensive group. They're doing it for $2.36. Wow, that's a huge leap. So if you've done your calculation on the PayStream calculator and you come back and you say, whoa, the innovators here can do it for $2.50. How are they doing that? Well, they're doing it with a combination of themes that we've talked about. They're using automation on the front end that change their process to improve it, and they're figuring out how to drive the people out of accounts payable operations to do more efficient work like reporting and analytics and forecasting. That's what we want accounting people to do, not pushing paper around. We know that this is changing, and the reason it's changing is because, well, there's certainly a need for speed, but as I was talking about the manager who was approving invoices at his son's soccer game or while he's waiting for the plane at the airport. The next piece here is related to changes that we see coming around the finance side. The controllers are increasingly interested in improving budgeting and forecasting. Perhaps you're one of them. We have powerful data inside of invoices that we have never entered into the accounting system. If you run a report in accounting, we can find out what we bought generally from who, but we don't have details on exactly what it was. We can see we bought a laptop from Dell, and it went to Department 5, but we don't know exactly the configuration of that laptop. We can't tell who approved it. Up front, we have nothing. So there's a lot more data on invoices today than we're capturing in our accounting systems. And for those organizations that have any kind of interest in monitoring their overall spend of what they buy, this can be a very powerful tool to get better spend visibility. We also see that efficiency is yielding not just savings per dollar on PO versus invoice, but also on the purchasing side, and it can be quite a different opportunity for us. So here's Frazzled Frank again. And, you know, in 2010, we lost some people in our areas, and we had to, well, make do with less. And here's the latest good news about the economy. Work productivity is up, right? Well, why? We laid off people. And we know that consumers now, in the same time, technology is transforming everything, right? Here's a mythical iPhone from the future that will be totally clear. I don't know, Steve Jobs is going to come back from the grave, and he's going to present this iPhone that's see-through. Is it possible? Sure it's possible. I mean, who would have thought that you could take a picture with this phone today and make an appointment for your doctor and search out restaurants, and it's incredible what we can do with it, right? So how are you going to use that technology to improve business productivity? That's the core question you want to think about when you're thinking about simple metrics. Because one of the metrics is, how long does it take for your organization staff to manage their invoice process? Okay, maybe it's 5 minutes a week. But for some of them, we're doing a lot of this, it could be an hour a week. What if it would be 10 minutes a week? Would they be happy? Would they be jumping up and down? You bet, and they'd use it. Now the problem for us is that when we're going to replace the people that we have from retirement, or as our economy improves, people are going to be moving out of the back office jobs. Why? Because it's a lot of manual work. Here's this fresh-faced young guys that you want to hire to replace them. Guess what? These millennials, they're not interested in working accounts payable today. So we see a growing staffing problem, and our metrics need to know how much labor that we have tied up in our AP process, because we don't think you're going to be able to afford to hire the people that you need in your accounts payable operations to do the data entry in just several years. We're seeing this today in some of the markets in major cities, San Francisco, New York, Chicago, basically have zero unemployment of knowledge workers that have at least a year experience. Zero. There's no unemployment rate. People are moving from job to job, and we're going to start to see some wage inflation. It's already happened. What we can tell you from our research at the PayStream Purchase-to-Pay Academy is that there's some success factors. The people who transform and use metrics start out with a transformation plan, they have a coalition, a team, not just finance. It's procurement, it's receiving, it's the suppliers, it's the stakeholders in our businesses. Those are the ones who want the change because they know that AP is antiquated, dealing with paper. And they want metrics to drive success. Of course, here at the end, the fourth one is somebody's got to drive change. Maybe it's you. Are you the one that's going to take your business forward? Well, PayStream has developed a number of tools to enable the leaders to transform the vision, one of which is we have a conference each year in September. In San Antonio this year, September 8th through 10th, we have 18 workshop leaders over 2.5 days of content of the innovators, what they've done, how they did it, how they transformed their operations. Some of them talking about what they did with their Dynamics tools. Others are hospitals, universities, and people in all industries, manufacturers talking about what they've done, how they did it, led by our staff of people. Overall, these themes in domination, when you think about it, purchase to pay, brings together procurement all the way to remittance. And we can see some core themes around how are we going to collaborate? How are we going to do the electronic process? And how are we going to pay? And the pay area is pretty interesting. So let me give an example here of somebody who's making some hay out of the electronic payment side. So I mentioned earlier on organizations that have had the perfect order. The perfect order and the perfect invoice. To us, the perfect invoice is one that is touchless, doesn't need any back and forth with AP. It's posted on the first pass. It's paid on time, and you're going to get some benefit from your payment timing. Similar, so we have a thing called the perfect payment, which is paid on time at the lowest cost, so certainly electronically if you can, which achieves the highest discount. Now, many invoices, and we know that only 4% of invoices today and some smaller set of dollars actually contain a discount terms on them. So what we're talking about here is paying some suppliers faster in exchange for some benefit. So we call this the perfect payment index. So an example here, if you could offer to the supplier, hey, Mr. Supplier, your invoice came in on Monday, here it is Wednesday, we've approved it. Well, that would be super fast and slick, wouldn't it? We've approved your invoice. You email them. How do you know their email address? Well, it was on the PDF file. Oh, they emailed it to us. Why didn't we use that? Oh, because we don't have anywhere to put that in Microsoft Dynamics. In tomorrow's world, you need to track the inbound sender so that you can communicate with them and collaborate. Mr. Supplier, we have your invoice. It was submitted on Monday, May 19th. Here's your payment date. You will be paid on June 15th. Okay, that's cool. What does that do? A couple of things. One, phone calls. Phone calls to AP don't come anymore. They know the invoice has been approved and they know when they're going to get the money. Number two, click here, Mr. Supplier, if you'd like to find out how we will pay you with credit cards. Oh, I get paid today? Cool. Click a link and you use a single-use account or a virtual card, accounts payable, to pay them with a credit card. Benefit to you, you're going to get a rebate from the bank that issues the card. It's a $10,000 invoice. You could get a $150 rebate. Found money for accounts payable. That's what the innovators are doing. They're using discounts to fund their initiatives. Another one here is what we call dynamic discounting, but that's beyond what we can talk about today. You can learn about that from PayStream's website. We have reports on this. So the innovation, of course, all starts with you. And here are some quick tips that we are offering to stay in the loop with all of the automation and opportunities that you have. I talked about the cost per invoice calculator. I talked about the white papers that we have that are free on our website, and about our conference called Innovate 2014 in San Antonio, Texas. We'll have about 200 folks together, plus a solution exhibit area with 18 vendors talking about their solutions and how they can help you, from audit recovery to electronic invoicing to imaging and workflow to electronic payments and in between. So Jason, in our time together, what questions have been started to develop? Because I'm going to go into the next piece of my session, but I want to see if we have any questions that are coming so far.
So far, no questions, but I would remind everyone that they can use the chat or the Q&A that they should see if they hover their mouse in the top center of their monitor to enter their questions, and we can get to them on the next break point.
Great. I'm going to bring up another couple of slides that I was thinking would be interesting to talk about in purchase to pay, specifically around simple metrics of getting started. We know that many of you are just getting started with your process. So what is it that you're doing, or what could you be doing to just get started? The most common question that we have, Jason, is what should we be doing to move this forward? And so I want to sort of paint this into, it's kind of a subject here when we think about the big picture and what's happening in strategic objectives. And this is related to just what I was talking about. When we asked financial managers at the Economist Intelligence Unit about what their top objectives were for 2014, of course, everybody's always going to say, yeah, we're trying to drive top-line revenue growth. Cool, that's great. Improving operational efficiency. Well, who wouldn't want to do that, right? Motherhood and apple pie. That's why we have so many people on the call today. But look at the third one. It's around retracting talent. And you can see that how that weaves into the three themes that I've talked about today. Efficiency of our operations, effectiveness of how it works, and in the last one, satisfaction, customer service. So we need to make customer services related to this first one around customer revenue growth. So an example here, we're working with a number of clients today, and one of them this morning said, we want to automate the accounts payable function to save our salespeople time. Our salespeople are burdened with managing their expense reports and approving invoices. We're trying to make them more efficient because we want them to sell more, and we have high goals for them to grow revenues this year by 8%. So senior management said, what can we do to make your jobs easier? They surveyed them, and they said, give us a new expense reporting tool. That is causing us a lot of pain, a recurring theme. So it ties in. The goal of the top of the organization is revenue growth. Metrics for accounts payable and procurement are related to this second theme here of improving operational efficiency. And of course, the talent is always what I was just talking about, the millennials and the other salespeople. Some salespeople leave because they want better technology, they want to make it easier for them. If you have the antiquated stuff, they're less likely to be satisfied. So the big trends, as we summarized here, AP is definitely getting out of the paper business. The metrics tell us that to this year, in 2014, more than 50% of Fortune 1000 companies are going to be paperless in accounts payable. Majority paperless. That means greater than 50% invoices being handled electronically by accounts payable. That's cool. There's a continued drive for paperless processing, and managed services is the big theme. What does that mean? Well, is your competency opening the mail, scanning invoices, keying invoices? Most AP managers that we ask this say, absolutely not. That is not our competency. Our competency is solving problems and knowing our business and entering the correct accounting into our correct accounting system, not doing the manual-based processes. So increasingly today, 70% of our clients that we write RFPs for and do strategy work for choose an outsourced services provider to do the scan and capture. That means they send the invoices to a post office box. Somebody else opens the mail, scans it, and 24 hours or sooner, the invoices show up in the AP workstation or directly to the approver. It has Jason Gumpert's name on it. It gets scanned by our third-party company. 24 hours later, Jason has an email saying you have an invoice ready to approve. touchless, paperless. Jason can click on it. Oh, yeah, I recognize this. Sure. Accounting string is this. He has a drop-down. He selects from his 3 accounting GL strings. He hits approve. It's done. It's paperless. It's done. It goes right into the back end of your Dynamics system, post a voucher automatically. It's set up for payment. That is a touchless invoice, and it's very common even in smaller organizations today. This is what we call straight-through processing. We're moving to touchless processing, and we're saving. If we can save 40% on the left, we can save another 10% here on this part. So now we got 50% savings. If you got 4 people in the accounts payable, you could have 2. 2014 is a watershed year for us because we know that more and more of our suppliers want to send the invoices to us electronically. The metrics tell us that, but we're not dealing with it electronically. So if you cross the bridge to my 3rd theme of customer service, your suppliers are happy about this. They want to get the electronic files directly. And, you know, we know that a lot of companies are still struggling with the paper. You're not alone. Paper here is, for the large organizations, is, well, about half, but look at the small ones. 77% are still 100% paper and AP. Still, we're seeing invoices coming in by fax, but increasingly email, and that is the growing piece. And when we talk about this growing perfect AP department, we think about, well, the storm clouds that we see on the horizon, specifically this perfect invoice concept, that it was received essentially never needed to be approved. It was touchless, and it posts to accounting without error or exception. Now, the first theme, metrics, central receipt. For those of you who still have not centralized receipt, I can give you 5 reasons from your accounting book that tell you why you need to have that done centrally, and that it's the best practice. And in fact, it's the only practice. Unless you're in one industry, distributed manufacturing, where the buyers are in the plants, centralized invoice receipt is still a best practice. From number 1 from your accounting book, accrual. Where are my invoices? And we don't need to estimate accrual when we have a centralized receipt. Customer service. 2, when the supplier calls, say, where's my invoice? We know, instead of saying, call the person you send it to. Control, fraud, risk, change, duplication. All of these reasons mean that keep pointing to the fact that the best practice and the only practice possible for managing invoices properly is a centralized receipt location. Now, if you have multiple countries, of course, you're not going to have it all come to Post Office Box, Chicago, Illinois, 60609. I think that was the one from the game show, wasn't it, Jason? The Price is Right.
You got me on that one.
Box something or other, 60609 in Chicago. You're not old enough. The perfect payment. Perfect payment is paid on time, the lowest cost, which captures the discounts. This is what I leave you with. The metrics, the simple metrics of what you need to process and move your business forward look like this. Where are you going to receive it? How are you going to pay it? And I'll go back and see if we have any questions that have come in.
Yeah, you know, Henry, one thing that this makes me think back to is a poll we actually just ran for our readers, and I'm just going to post a link to it here. But the question was essentially asking them, are they actually utilizing workflow in their Dynamics systems to automate processes? And it was posed in a little more generic way, but it came out of an article we did about using workflow in Dynamics AX for financial management. And the results, I don't know if people are able to see it or click through, but I'll just kind of read off the top line results from it. There were 24 responses. The most popular response was that they're either not using workflow at all. That was, I'm just pulling it up here. That was 38%. Somewhat but not enough was 33%. Only 13% said using it adequately, and then 8% said they actually need more advanced workflow, suggesting, you know, more specialized, best-of-breed kind of product. And this is not a scientific, survey or anything like that, but I thought the results were interesting, and it made me wonder, in cases like that, I'm sure you encounter people not adequately using automated workflow all the time. Is it linked back to not aligning the technology with some of those strategic goals that you were showing in that last slide?
Well, I think we have to go to the basics of what is an accounting system. So we would love it if it would be the super-duper paring knife, and it would do everything, and it would bamboo steamer, and it could do sliced ice, juliennes the fries. But an accounting system is an accounting system. Dynamics is an accounting system. And the workflow componentry inside of Dynamics, well, they're still somewhat cumbersome. They're getting better, certainly in the 12. It's getting a lot better, but it still requires IT to do the work on it. The reason that we see more than 80% of accounts payable automation opportunities not using their accounting system's workflow, 80%, Jason, do not use their native accounting system, whether it's MS, whether it's AX or GP or A, because some of these solutions, of course, don't have any workflow. But more importantly, it was designed 5, 10, 20 years ago. And you could see what was happening with technology, that these tools quickly become out of date because the accounting group who wants to manage these tools doesn't have the ability to change it. So here's an example, right? You're the controller of the IT manager of a mid-market company that uses AX. You buy another division, or you add another division, or you sell another division, or another division starts really growing fast. You want to change the workflow. For that group, you want it customized. Can't do it. We've got to wait in line. The consultants have to come. We need to pay $30,000 to hire some people. That's not the way business is done today. On my phone, when I want to change something, I go into that little thing that looks like a gear, I see settings, and it's done, right? Why can't we do that with our accounting system? Well, because it's an accounting system. It's designed to be bulletproof. So, you get the punchline, 80% of the people do not use their native accounting systems for the workflow and accounts payable because it's not flexible and configurable enough. For those of you who are using SharePoint, SharePoint is another key, opportunity here. But again, you have to bolt on typically some kind of an enhancement tool to make SharePoint really quite effective for an AP solution. And there's a bunch of people that do this today. This is not anything new. But there's some tool kits that go and work well with SharePoint to make it a really good accounts payable tool. And we see that, and we see a lot of other third-party solution providers, Metafile and BillZap and other companies that are providing the Dynamics AP solutions. It's because it was designed in the 1990s.
Okay. Just as a reference here, I'm going to post a link to the webcast I was referring to that talked about just some of the use of AX workflows in the latest version for anyone on the line who's an AX user. I also wanted to just post a link to, Henry, your previous session on P2P in 2020. And we have a recording of that I think people should check out if they haven't seen it, because obviously you touched on some of those topics, but I think there are some areas where you went a lot deeper in that session on some of the blanking on the term for it that some of the terms you were talking about, some of the concepts you were talking about. You dive in a little more in detail on that, so I'm going to post a link there too. We'd love to hear from anyone in the audience about some of their experiences dealing with some of the challenges Henry's talked about today, dealing with workflow, with automating processes for your financial management. But we will start wrapping up because the question queue seems to be empty. Henry, any parting words before we start concluding here?
Sure. Well, the title of our session, Simple Metrics. We have three key themes. How much does it cost to process an invoice? Start there. Next one. How long does it take? And how are you satisfying the needs of your organization? The future is that it's going to be difficult to staff accounts payable. Today, we know that the folks in our organization approving bills is not strategic for them, the approvers. So we have a combination of concepts that make the process of measuring and monitoring this very strategic. This is no longer just would be nice. This is a must-have. Your costs are going to be going up. You're never going to get control of it in a paper-based environment. It's time. And this technology, the last piece, is for, especially for AX users, this technology is super cheap today, and you can get third-party companies to process, to open the mail for you, scan the invoices, take the data off of those invoices, and give you a file that you can post to AX or to route to the approvers or match against POs for about $1.50 a piece or less. So you can see that for the average organization, they're spending $6.70. The business case is there. And when we throw on other elements around capturing a discount, paying with credit cards, there's revenue. AP can become a revenue opportunity. And that typically is somebody who's stage 2, metrics driven. They've started to get rid of the paper. Now they're thinking about the driving efficiency, further efficiencies. My name is Henry Ijams from PayStream Advisors. I hope that some of you will come to our annual conference in San Antonio or download some of our additional and free research that we have. I've enjoyed spending the time with you, Jason. I hope it's been valuable for the participants.
Thank you so much, Henry. I know it's been a really valuable session for the folks online. We do ask you if you participated today. Well, thanks again for coming. And please look for the survey that will pop up at the end of the event here. We do appreciate hearing from you, hearing what you're interested in, and hearing how the session went for you today. So with that, I will start wrapping up. Thanks again. We are recording the session. We'll make a copy available to all of you quite soon. Henry, thanks so much again for joining us today.
Bye-bye.
All right, thanks. Bye.